Happy Friday, everybody. Good to see you. Good to see you. Welcome to Equity Roll. We're watching yeah.
Hola.
Hola, hola.
Happy Friday. Happy roll day. Happy Friday the 13th. Do I need to go on?
Yeah. So if for those of you, we're primarily futures traders, although if you want to look at some equity products, just let us know. But this is what we call Roll Friday, where the equity indexes, the Nasdaq, the S&Ps, the Russell, and the Dow, they have 4 expiration cycles, and we have the roll from where everyone's trading one contract to where they're trading the other contract. And so we're moving from September to December right now, and it's a kind of a split volume day. It can be kind of a weird day. And sorry about that. I'm still kind of recovering from a little bit of illness. But it can be kind of wonky. So I'm going to walk you real quick through what I'm looking for yet here in the NASDAQ, if I get it. I don't know if I'm going to get it. I'll also look at what I'm looking for in crude oil, and then we'll kind of field some questions and see what the day provides. So real quickly, just a couple things here. So crude, I've got a level down here at 54.40. We have extended the initial balance low. We do have some single prints here, some poor structure. This is kind of an area that I'd like to look long back for 54.85 if I can get it. Alternatively, if we see a buying spike kind of above 54.90, we would look for a long back here at 55.10. That's kind of the area that's available yet today. NASDAQ had a really prominent point of control. Well, I mean, the volume point of control actually was down here at 39. There's another level up here. We've been flirting in and out of yesterday's range. If we can take out the initial balance high and try to attempt up this way, we've been doing a really good job of establishing value here around 79.24, and that's an area I'd like to fade and short back towards that area. I'm only looking short NASDAQ today. Would not even consider long unless I traded back here to like 78.62. That's quite a ways away. But if we don't trade up higher, if we trade below the low here, then I'll look for pushes up to like 79.21 for a push down towards 78.71. So that's the game plan. I am noticing that bonds are pushing lower significantly. This could be the canary in the coal mine that next week the FOMC is going to stiff Trump and we're not going to get any rate cuts. They've been pushing lower.
that would cause major problems.
Yeah, it would. If we kind of look here, you can see the move that bonds have been in. Now they are into what I would call an extreme posture now, where at least on the near-term basis, weekly value is almost 2 handles higher. So we could look for a relief, but that may not come till next week, as we're I think we're not one time framing, but we're definitely pushing lower. And closing the low on Friday would likely move us lower into next week as well. And there's actually on the long-term composite, there's actually quite a bit lower that they could go. Okay, now here, let's watch crude here, because this is kind of the area that I was looking at. Let's see if they can hold this 5 minute, please. Give it a good pop. That's a pretty weak number. Give it a good pop. So these are 5 minute candles it shows me which period that those are relative in. I kind of go back and forth my shorter time frame triggers. We can look at it another way here, which I don't recommend unless you kind of know what you're looking for. When you know what you're looking for, then it's all right. Excuse me. So what I'm looking for is a pop in the order flow. So this is a volume breakdown indicator, shows us the difference between the buying and selling at a certain price. We had a pretty big pop about 15 minutes ago. I'd like another big pop like that. That would give me confidence to be long this trade for that push back up towards 55.15. I want them to hold, so let's see if we can hold and then we can join them. Stops would be below 78 if we join. And this is what we'd call kind of a structure cleanup. It's where we can see in the profile there's a hole in the profile that needs to fill in, and we've got some volume up here like the 55.22. So that's kind of the area that we would target and expect the auction to slow as it moves that way. Now that we've taken out IB low, very unlikely that we would get 55.70 or higher today. So it tamps down our expectations. Doesn't mean that we don't go long though, because we're still very much below value on multiple time frames. Oh, they're just going to run it. Dang it. Come on.
Yeah. That's all right. It's Friday.
That's all right. It's all right.
I expect the Nasdaq to just
drift.
Yeah, after those first 2 30-minute candles, I'm expecting a little bit higher prices here, but I'm done for the day. I'm done for the week. So is all done. Platforms are shut. My charts are open.
We had a nice move in corn yesterday.
Oh, well, yes, that I'm still keeping that one. So
yeah, we'll talk about that trade. In the meantime, hey, if there's any products that you would like for us to look at other than these products, get a read on or talk about, go ahead and throw those either in the Q&A panel or in the chat, and we'll take a look at that. And since it looks like Crude's not going to give me the trade that I want, and when I say the trade that I want a nice reward for my risk. See, if I put the trade on here, if my target is up to here, I'm basically a 1-to-1 risk reward. I'd like the reward to be richer than the risk. And even still, that wasn't a really strong order flow number. I mean, decent volume was in that, but and then also, intraday, if you look for intraday, you like to buy at or below value. So that would be a purchase at value. That's why that 54.40 looks great. We're establishing really nice value here down at 54.95. If we push lower, that would be a really nice 50-cent target back up here. Right now, if I enter, I'm only looking at like 20 cents. See, so it's not as much attractiveness to that. Okay, let me jump over and let's do a proper introduction here.
Introduction.
Reminder of risk. Whether you're new to trading, been trading a long time, you know that one of the things that we can control, have any semblance of control over, is the risk. And we're mindful of that. Whenever we put on a trade, that's one of the questions that we ask is, what are we willing to risk? Some people call it defining the risk, literally, objectively saying, how much am I willing to risk for this trade? If you're not doing that, may we please encourage you to do so as you're placing your trades. Just a overall view of kind of how we see things. We're behaviorists. So fundamentalists interpret balance sheets, technicians interpret price, and profilers interpret behavior. So what we're looking at when we're looking at these weird graphics that look something like the Matrix is we're essentially looking to graphically represent behavior. It'd be similar to what you would see on the floor in Chicago, also New York, where people were making trades based on behavioral markers more than they were on specific technical or fundamental ideas, specifically intraday. And we have our buddy Tom and Corvia over at Blue Tree to attribute this to. Need to call Tom, check in on him. A couple introductions. I'm Josh, the founder of Trade Profile. Been in the industry now about 10 years. JP's with us about 18. Between the two of us, we're about 28 years, pushing 30. I guess when you get to 28, 30, it all blends, right? But
that means we're getting old.
It means we're getting old. It does mean that we've seen a number of market cycles, and there's some stuff that as you're working through your development, there is a bell curve in trading development. So resilience and stick-to-itiveness is really important. Because there are some things that you'll continue to have these aha moments the longer you're around. But the pinnacle of what we do, it's the pinnacle, the foundation of what we do is really around what we call our profile trading development pathway, which is it's a process a systematic process of understanding the auction, using profiling tools, building your plan so that you can move towards trading skill and consistency. If you're not consistently profitable yet, we're a great firm to work with. That's what we're going to work on. We're going to work on building your playbook of trades and your consistency and honing you around. See, we think that consistency, well, not we think, we believe consistency resides at the intersection of these three ideas, is that there are 4 behaviors observable in every auction. Really just 4. There's a move, there's rest, there's test, there's another move. There are 4 questions to ask before you enter a trade. What's the opportunity? What's the objective target? What am I willing to risk? What's the objective, not subjective, but objective target? What would tell me that I'm right behaviorally? What would tell me that I'm wrong? If you don't answer those before you put on a trade, you don't put on a trade. And then the 4 stages of auction competency and how to know which one you win. Are you at an unconscious incompetence, meaning you don't know what you don't know? Or are you at a conscious competence, where you do know what you know, but it's not instinctive? That would be an unconscious competence. Stage 4. Stage 5 would be a transcendental competence in which you have gotten to that place of unconscious competence, and yet you remember what it was like in the struggle. And that's really, who we aim to be, is we try to remember what it was like. Each day we put to what are, the ideas that we have generated in the process into action. Because ultimately, if concepts is one thing, but if it's not put into actual action, then it's useless. And we do that through our trade plan, which is essentially, as run a managed futures desk through a GIB at RJO, and I looked at the process I was going to every morning, and I was like, okay, what are the fundamentals driving the decisions that I'm making in the plan that I have? That is what our pathway represents, and the trade plan is what we put that into action. So with that, we're back to the Q&A. Thanks for the intro there. We're back to looking and seeing what is going to happen.
Do we have submitted questions this week, Josh?
Sorry, I spared you guys the coughing. We did have a couple. Obviously, people are looking. Well, let's see. We had a question around just some day trading ideas. We had some questions around just volume profile in general. What is volume profile? Mm-hmm. We also had some questions around. Let's see here.
Funny story. So the boys were asking me, and my boys trade. So when they were learning, I talked about the volume profile, and they go, well, what's a volume profile? And I said, it's a profile of the volume. And the look on their face was priceless.
That's awesome. That's really funny. Yeah, I mean, it's essentially this. It's these histograms on the right that represent, so you can see, which volume had the greatest interest. What's really helpful, and we call that inventory, that's really just a representation of buyers and sellers active at a certain price. And on this one chart right here, in fact, if I just blow this up so we can all see this better, this is a longer term chart that I look at as part of my planning process. But this represents a running composite on the right side here of about a month of data, like kind of the rolling last month, 30 days. On the left, I've got one that's about 180 days. And then I can see weekly and the monthlies behind those. Why is it important to see all these different time frames? So what I'm really looking for is I'm looking for where is there multiple time frame convergence, meaning, like, where's a price level that showed up in a weekly spot, in a monthly spot. For example, there's a 57.60 to 57.80 level up here in Crude. That's a significant level. We interacted with that on a weekly basis. And over a month, that was a significant level. If we got back to this 56.39, that's significant over a couple different months. So those are 2 levels that are really standout levels that you could have as part of your planning process as you're coming in each day, and it allows you to quickly identify where those are. We find often that a lot of people that try to start with profile, they'll just look at the given day, and while that's important, that can help you find specific areas of interest. Just like today with Crude, I mean, I think it's very reasonable that we see 55.18, 55.20, because that's a developed node higher, especially if we can get across these single zones. But in the broad scheme of where we're going, ultimately Crude's got some work to do. even in the fact here, you can see the color intensity. So this red up here versus this gray, it's essentially saying that 70% of the volume for the last week is above us. So if you're short here, this is why I'm looking long. If you're short down here, you're short way below weekly value, way below monthly value, way below 6-month value, and you're basically just above today's value. So if you think about that, where do you want to be active? Where do you not want to be active? It starts to cascade either against you or in your favor. That's just a little primer.
And guys, just understand that if you have questions now, go ahead and just place them in the queue. Just go ahead and put it in the chat or the Q&A area. And just, today's about any questions. There's no dumb questions. Just, I'm going to say that right off the bat. So feel free to ask anything, because what you think may be a dumb question, I can almost promise you, Josh and I have probably made that mistake or have come across that and thought about that question as well. But yeah, please do. We want to answer everything we can for you.
Okay, here's somebody had asked about equity trading. I want to look at Goldman Sachs here. That showed up on my quick sheet this morning.
Did you say Goldman Sachs?
Goldman Sachs.
I'm like, do you have gold socks?
Gold socks.
Okay. Okay. I never heard of that one before. The Sachs man.
All right, let's see here. Let's get to a 30-minute. So there are a number of products that I trade. I mean, we trade Nasdaq and crude oil. We look for opportunities in those every day. Looks like Nasdaq's pushing into yesterday's range. Good for them. There's the alert. But there are other products that show up when there's a certain interesting configuration of price to value. Goldman Sachs is now on my radar. I gotta say, if you haven't seen Goldman's Wolf-FA index, it's hysterical. They actually mapped Trump's impact on markets.
That is great.
It's way too late. I mean, we're way too late in the term that they finally did that. But monthly value in GS is down here at 201. Weekly value, or the rolling weekly value, is right here around 220. So on a shorter term, how do we interpret that? Essentially, we're moving away from monthly value. That's fine. The market was balanced for quite some time. The stock was really caught in a range. We're breaking out of that range, and they've accepted this on a weekly basis. This morning, we migrated value from around 215 up to 220. So when you see a volume point of control migrate higher, in fact, see how there's gray down here, but there's no gray above. That's an indication that the auction's likely not finished moving higher. But I'd keep GS on my radar and look to potentially do something if I can get 225, 230. There could be an opportunity to look short in GS. Not a place I'd look to be long. However, if I was going to be long, I'd want to defend kind of this 220 area. If they get acceptance below 220, they can start moving back towards 204. Hang on one second, everybody.
Yeah, and just to add to that a little bit, when he's talking about short, we're definitely talking about using options to be short, not the actual outright. I mean, if you have that capability, that's fine. That's in your, you could do that. But, we typically, anytime we're using on the short side, we are using options to do so.
Yes. Awesome. My son just called me, but it looks like he butt dialed me. So it was an odd time for him to call. So just making sure that he was in good shape.
Yeah, he should be in school studying.
Yeah. Okay. So that one is not as attractive. See, the other one that was on my list this morning was Micron.
Micron. Yeah, I looked at that yesterday, actually. Micron Technologies, MU.
Yeah, similar situation here. I mean, I think if we could get, it's a little late for me to want to look long. Now, if I want to look long, given see how even on a 180-day basis, I'm away from the profile's getting thin up here. It's a little late to be long. If you want to be long, you'd have to be holding this 59.40 area or 50.50. But I'd rather like to see if they get like 53, 54. Look for some selling to step in and do a little credit spread.
Yeah.
Have an option spread up that into the short side.
Yeah, I think you're going to find some up into the 54 to 56 area on that. And if it does pull back a little bit, then you could probably run the other direction. If you're going to take outrights, you can do it that way, or you can run put credit spread on that.
Mm-hmm. Yes.
Or if you're not used to that, there's a couple terms, whether it's a put credit spread or a bull put spread.
Right.
Which I don't like that term.
You could also just buy puts. But if, by the way, if you do naked long puts, make sure that they're long duration, outside of 45 days. Get inside of 45 days, and the extrinsic value starts to decay, and you can have the right direction and still the trade not work for you.
Yeah. So it means you'd have to go, like on MU, you'd have to go to probably the November strike, because it's 42 days out on October. Those are weeklies.
Yep.
So yeah, just be aware of that, because it's okay to buy puts. Everybody, listen, I'm a big credit spread guy, but buying outrights for directional is okay as well. You just got to know how to play them, to give yourself a little bit more time so you don't get the decay on it and get killed. If you're buying the weeklies that expire next week, you're just might as well write me a check. It's a lot easier. A lot less painful.
Just write you a check. That's all we got to do.
Write me the check. It's a lot less painful.
Yes, looks like they're going neutral here. Neutral behavior is where we trade above and below the IB, and it's just a sign of directional non-conviction. We're doing a pretty good job of expressing higher. This is the monthly VWAP, so volume weighted average price, and 2 standard deviations at volume weighted average price. So we're kind of pushing that. We're getting closer to those all-time highs. By the way, profiling is really great for finding levels in your plan when you've got inventory from the past to lean into. When you don't, like we essentially have air above us. When that's the case, we'll use things like a Fibonacci number to generate some specific reference levels.
Yeah, and that's a great point, and probably a good, if you've been on these calls before, you probably heard us talk about this. So Josh mentioned it earlier on the intro, was that how do markets behave?
They got those singles done.
Yeah, I see that.
Nice. All right, hang on a second.
So markets behave in a way where they rest. In other words, we call that balance. And then they auction away from that balance area, and you can call them exploring, probing, whatever you want to call them. There's lots of terminology. They break away. And then one of two things happens. Well, maybe a couple things, but they are responsive selling and buying comes in, or they find a spot where they do find some buyers and sellers, and they actually accept at that price. So that's when we talk about, okay, value could be moving up because price moves and then accepts higher and keeps accepting higher and higher, or vice versa to the downside. So when you understand how markets actually work, then you can set your trades up around that. Okay. And that's important, guys. I mean, if there's anything that, and this is my opinion, Josh, I think you would agree that you need to understand that. First, you need to understand the structure of the day now we're talking profiling, okay? But in general, if you're not looking at the profile every day intraday, and you're just looking at the composites and you have those big volume nodes as levels, right? Those are great targets because that's where business has been done before. And price usually looks for places where business has been done before. And if you don't believe me, just go back and look at charts in the past and look where price explores and auctions to, and where they find some resistance or some support. Okay, that doesn't mean it's going to stay there. Listen, I'll be the first to tell you, levels I don't care how big they are, they're meant to be broken at some time. Okay, it may not be the first time and it may not be the second time, but they're going to be broken at some point or another. Now, it doesn't mean it's going to happen today, tomorrow, the next day. We've had levels below us that are years, right?
Yeah.
That we're not going to get those for some time. Okay, so, and what Josh had talked about, when we're making all-time highs, well, how do you figure where this market's going to stop? That's when we do use a Fibonacci extension of some sort, which Josh is pushing up there right now. So. Anybody have any questions, any specific questions? Go ahead and toss them in there, guys. I mean, this is what this is for. Just open it up. You know, let's hear some things that you guys want to know and want to learn, and we'll try to do our best to give you some in a short period that we're here.
Nice. Yeah, so as far as my plan to on the ES, I'm more of a swing trader with the ES, and primarily do that using options. I'm really not interested unless we get to 30.35 or, you know, down to 29.83. We're kind of in the middle of that, so there's just really nothing. You know, if why 30.35 and up here? Well, if we get up here before we go lower, we're running out of participation. I mean, if you look at this monthly volume profile, like there's just nobody participating up here. And that's the real benefit of looking at profiling, is that you can see that not every price has the same weight to it as another price. And you just think like an auction. I mean, if I'm moving higher, but I'm getting fewer and fewer people to participate in that auction, man, there's more likely I'm going to get some kind of snapback liquidation event that could allow me to either be long at a better price, which, you know, if you want to be long, that's the way to do it. And come on, NQ, don't roll over there.
And just understand, today is, you know, the last day. It's roll day. I mean, we're really rolling today, and like Josh said, on futures we roll contracts, we roll month contracts, and so this is the week we do it. And hang on a second, I gotta take that call, guys. I'll be right back.
Maybe maybe Jed got a call from his son, or one of his sons. Any other product anybody wants to take a look at? Equity, future, fire away. Also, feel free, if you have a microphone, want to ask a question that way, just let me know and I can allow you to talk, and we'll go after it. And you're a quiet bunch. Okay, here's a question. So what platforms am I using and why? Great question. So on the right here, this is Window Trader. Window Trader Blue is this is kind of my go-to platform when I'm looking to actually enter a trade. When I'm doing planning, I'm often using this platform over here on the right, which is Investor RT from Linsoft. Now, you may have used a platform like maybe NinjaTrader or Thinkorswim or something that has data, you know, actually included in the platform. So this actually, I subscribe to DTN data feed, which powers and gives me tick by tick data. And you know, you want really good data. Thinkorswim, for example, they actually have their main data centers in Houston when the exchanges are in Chicago, and they don't give you accurate tick by tick, you know, every trade that goes through. They kind of aggregate that over a 1 minute period. But IRT is a fantastic platform, really great for running all kinds of different studies and backtesting behavioral statistics to get an idea around behavioral probabilities on the day. It's got some really cool studies around that. But what's awesome about Window Trader is not only can I see the profile really kind of any way that I want, but I can do these intraday objects like this, where if I want a 5 minute, or if I have another template here, maybe I have updated that template. I can just turn things on, off. I can turn off the overnight if I want. I can really do some fun things in this. And this is the product that I have up when I'm actually looking to place a trade. Use IRT kind of as a backup. And then I do have a Thinkorswim account that I use. I primarily use that for alerts, literally. Like because I like the app, I can easily set alerts because there's, even as we identified here, there's prices. Like I'd be interested in a long at 54.40. We're nowhere close to 54.40 in crude. So I got an alert down there. I'm interested in a short kind of around 79.56 up to 79.69 in the Nasdaq. We're not there. So I could set an alert and it dings me on my watch or on my phone and works really good at making sure that I'm only looking and I'm only participating and looking at the prices that I want to participate at, not the ones that I don't. Because you can find quote unquote triggers to be in a trade all the time, but the question is like what's the target? Even like in this 5-minute what we're seeing right set up here in crude. If I just looked at this, if I just looked at this arrangement here, I see a move higher on strong buying order flow that then was canceled out by an engulfing 5-minute period. That could trigger you short. The question is to where. So if you haven't pre-identified that, in this case, it's not a very good advantageous because you've got the daily values right here. So sure, we'll go tab that, but I mean that's not a really great risk reward. However, if I saw the flip of this type of behavior down here, that would be really attractive for a move back up towards a really nice defined target. Oh, great. John, see your question there. So we're going to look at the 10-year note, the notes as we call them. Nope. I think it's this one. I'm going to have to download data. I don't often look at that product. I always look at the bonds. All right. So let's just kind of start here and look at a longer term profile to kind of see where the notes might head. Okay. So for one, you can see just like the bonds, we've got a really strong downward move from prior value, that 143.66 area, and they're pushing lows of the week. Now, I mean, we are kind of running out of inventory as we get into this, but we're really coming back to a prior area of balance. This really is where. Oh, hang on a second. Really where this breakout kind of started from. So now you're stuck. We're kind of in an area of balance here. There's an area of balance above. So the question is, where's the trade? Slope of the monthly VWAP's definitely to the downside. You're hugging 2 standard deviations. So this is definitely an algo. The reason I use VWAP is because the algos compute that and run that stuff pretty consistently. So I don't think there is a trade yet. I'd be interested to see what would happen if I got to 138. It's too late in the profile here to be short, or I'd like to see a rally up into these areas first that came before I made a move back that way. So those are places I'd put alerts at and just kind of watch them. Does that make sense, John? That's a great question. I would definitely expect it to pause and rest when I get back here to 138, and that's the magnet that's likely pulling it. So even though it looks it looks weak, and there's no reason to be long yet. It is getting in a place where you could easily see the trend because it's already developed, and try to short here and then get an immediate knee jerk. So I'd rather have a pullback first, especially up to this first level before we push lower. But great example.
Nasdaq's trying to rally.
They're trying to get there. They're trying to get there.
They are.
I like it.
Sorry, Kim is calling me. Postures, what are they? Oh, you cover postures. Very good.
Yeah. So this is a nomenclature that we use to help establish what we call context. So you may hear people talk about context in the auction. You'll hear traders talk about context, and it's hard to define that. And I was looking at my plan, and by the way, so if you haven't discerned, so I'm an intraday swing trader. So I'm not a scalper. JP's not a scalper. We typically would like to take 1 to 2 trades to max in a product per day. And so we know what trades we're looking for. We're patient on those. We'd like to capture 25% or more of the range available for the day as terms of a goal. Now, inside of that, there's sometimes when you're bigger than others, and you have a higher sense of where the auction's likely to go next, specifically within those 4 behaviors that we talk about. And one way to kind of get a sense for that is using something that we call posture. So what that is simply looking at 3 variables. It's looking at price, it's looking at the rolling 5-session point of control, volume point of control, and the rolling 20-session volume point of control. So just looking at the notes who we're staying with on this chart. So I've got 20-session volume point of control up here. I've got 5-session point of control down here, and this is essentially monthly value. This is essentially weekly value, and then I got price. Okay, so if I want to sell something, do I want to sell below monthly value and below weekly value and below daily value? Like, is that good trade location? No, it's not. I mean, that'd be like saying, hey, why don't you go sell your house below the last 10-year price average, below the last 3-year price average, and below the lowest comp price of the year? Would you want to sell your house? Like, you would do that only if you absolutely had to liquidate it and you had no other choice. But if you could wait, you definitely would not sell down there. So the same thing holds for financial markets. So that's why even when we're looking at the longer term chart, it's a little late to be short the bonds or the notes if you're not already. So if you're not already, you likely missed the move. Could it go lower? Sure. Is it starting to run out of juice and get to a place where you could get trapped lower? Absolutely. Because that last person, that laggard into the market, is the person who is the first aggressive exiter when they're wrong, right?
Yeah. And that brings, actually, Josh's point brings up another point: when to trade and when not to trade. So I'm going to ask a question, and you guys throw in the Q&A just your answers. Listen, I'm not going to call anybody out on this, but is there a time to trade and not to trade? It's a yes or no question. I mean, is there a time, in your opinion, to trade, and is there a time not to trade? And my question to you is, when is that time? Okay, so and it just, you can answer one or the other if you want to, but the trick here, guys, is that your job as a trader, and maybe this is a better question: what is your job as a trader? And I'll answer that. It's a rhetorical question, but the answer is your job as a trader is to wait. Okay, so most of us who grow up, right, we go to school, and what do they understand? The environment we're in, because now we're going to go to the psychology portion of this. It's the environment. And honestly, and I think it's for Josh and both myself, it took us a while to understand this in trading. Even though we have the institutional experience and stuff like that, it doesn't matter. You still have to learn it. The bottom line is this: is that when you are developing as a trader, you have to understand that when you were growing up, you were taught something totally different, which is to excel, to push, to work hard, to grind it out, to make it happen, right? Those are things that you can do. Now, it takes help with other people, of course. You know, you never build anything by yourself. It takes a village. But it takes you to get up and do something every day. And in trading, your job as a trader is to still work hard, but that's a little different. In other words, you have to understand your trade setup, develop your trade setup, know it inside and out, and then, you know, review your charts to know, like what Josh talked about, posture. What are we in right now? To understand, is it a day to trade or is it not a day to trade? All right. That will save you, first of all, a lot of money, and two, a lot of grief.
Yeah.
Right. So there are days to trade and days when not to trade. And it's really based on your trade and your trade setup and your methodology. Okay. And you guys got to get really good at that. I tell you, if there's one thing, it's like in golf, and I've had my experience in golf for many, many years. In golf, if you want to improve your game real quick, go out and work on your short game from 100 yards in. You will improve your game drastically quickly. Okay. In trading, if you want to improve your results quickly, know when to trade and not to trade. Okay. And your job as a trader is to wait for those opportunities. We call it big bags of money in the corner in the Slack channel. We always refer to that. We are waiting for bags of money in the corner to show up, and we're just going to walk over and pick them up when they're ready. We're not going to force anything. We're not going to do anything like that. So when Josh says, I'm waiting for this level and that, I'm going to put alerts here and we're looking for this to happen, we're waiting. We're sitting around. So what do we do in the meantime? Well, you can put alert in and get away from your screens. That would be my first recommendation. And if you can't get away from your screens, and you know, I've got I usually turn on a movie or a sports event or listen to the radio, or maybe just, you know, check email or whatever the case is. I'm doing something rather than trying to get sucked into the market. Yeah, exactly.
You can back test, you can practice, you know, and specifically to this, you know, like what, because, you know, saying to wait is great, knowing what to wait for. So like in this situation here with the bonds, where this is what I would call extreme posture, where price is below the 5-day, which is also below the 20-day. I would only take a long trade in bonds. Only. I absolutely will not go short in this situation.
Yeah.
And the equities right now, price is above the 5-day, which is above the 20-day. I will only look for shorts. That's it. So even like today, when I believe the Nasdaq was going higher, and you can see over here that Nasdaq has moved higher, I will only look for advantageous places to be short, because the broader context says it's late being long. And I want to stack probabilities in my favor. So I'll just look for a trigger that fits the criteria. And some of that can be an order flow metric. Some of it can be a day type. So in profiling, we look at specific day types that exist. And we also know the probability. So the fact that bonds and notes have pressed below the opening range of the you know, opening hour range, very unlikely we're going to get a significant move higher. So, you know, just like with crude, the fact that we've taken out the IB low, very unlikely that we're going to be above 55.70 today. And you know, now I'm actually liking what I'm seeing, that, you know, the push back toward the zone that I'm looking actually to be long. Nasdaq, we've taken out the initial balance high. So even though I am looking for, you know, longer term shorts and a bigger move, as far as today, you know, I really wouldn't expect to see us back below 79.21. So with that being the case, hey, if I can get to 79.69 and find some sellers, or 79.56, now there's a bigger chunk of the potential range in that divergence to price to value that's really impressive.
Yeah, absolutely. And so that brings me to the bond trade, just like Josh said. If you were wanting to be short bonds and you missed it, what do? Nothing.
Yep.
Okay, you missed the trade. It happens. Happens every day. Happens every week. Please get that into your head. I can't implore that enough. Just don't say it to you. Write it on a piece of paper. Put it on your desk. You know, do whatever you can to understand that fact that if the trade leaves the station without you, it's gone. Yeah. And here's the great news about this. There are going to be thousands and thousands and thousands of more trades that are as good, if not better, than the one that you just missed.
Yep.
And when you get that attitude, guess what? It's going to change for you. Guaranteed it's going to change.
Absolutely.
And Josh and I, for us, we've talked about this numerous times. We both said, what was the biggest difference besides psychology, making some shifts in psychology in our trading? What was it way back when? Gosh, how many years back? I hate to even think about it. How many, when we started really becoming consistently profitable, what was it that shifted? Well, it was two things: a mindset. We had to realize that we can't chase trades and do stupid things, right?
Yeah.
There's an old saying that, and I got to think about how it runs. Trading's like pros who putt for par, have 3-footers for par, and dogs who chase cars. They don't last long. Okay. Now, one, I have a history in golf, so I can say that. And two, I love dogs and lived out in the country when I was growing up. So I've seen it firsthand, and they don't last long. I mean, I'm not trying to be cruel, but that's just the truth.
Right.
So with that, don't chase. The second thing is we just, it was waiting for the IB to set up on probably 90% of the days that we trade, which is the first 60 minutes. And when we did that, there was a clearer picture. Everybody's what we call action junkies out there in the world.
Mm-hmm.
And the action junkies, and of course the algorithms, because what they're doing is they're sorting the book out early in the morning off the open. And so when the book comes in, all those late orders and orders from the institutions in the US start hitting the books early in the morning on the open, trying to balance out what happened overnight, then guess what? Things get whippy, and you get, market moves up 20 points in the Nasdaq and then rolls over and goes down 20 points, and you're trying to run a 5-point stop. You're going to get stopped out multiple times. So we decided to let that first 60 minutes play out, let all those guys hammer it out in there, and then we'll go ahead and play in this after that. And you know what? Josh, I know Josh will agree with me on this, is that was a drastic change in our trading. Mm-hmm. Couple that with the psychology portion of it. Don't chase, make sure it's a trade, manage your risk correctly. And if the day it provides it, then take it. A lot of people come in and say, well, I need to make $500 a day. I'm always real cautious about somebody, allowing somebody to say that on a daily basis. And here's why. Because what if we get into a low volatility market where we have months upon months where our ranges are terrible, and you can't get every tick. So if let's just say we're in a 90-point range in the Nasdaq, which is pretty good range, you're not going to get 90 points out of there. If you can get 12 or 20% of that, you're friggin' trading awesome, right? So just be aware of what, the type of day is available, the type of ranges, what's going on in the day. Josh, you said something, was it yesterday, about the VIX and how your trading sucks when it gets below 15 on the VIX?
Yeah, it used to. So there's VIX is a measurement of expected volatility. That tracks with the S&P 500. The VXN, the RVX for the Russell. I think there's one for the Dow as well. I think it's the OVX for oil. But when I do pretty good with a as an intraday Nasdaq trader, I can get 2 or 3 Nasdaq trades when the VXN is over 15, which we're kind of right there. When we're below 15, or like the ES gets down to like that VIX gets down to like, well, kind of where we are, like 13 or lower. It gets really hard to pull out intraday stuff. You have to be way more patient. Your ranges are contracting. There's less opportunity, and that it's cyclical like that. Periods of larger volatility and opportunity are followed by periods of more complacency and less opportunity. And you can use a metric like that to just kind of go, oh wait, I should tamp down my expectations. there's just not as much here as there has been.
Yeah. So what we tell you is not preaching. What we tell you is, hey guys, we're trying to look out for your bank account, man. We don't want you focusing on the bank account. What we want you focusing on is execution, which means, is this my day? Is this my trade? Is this the right environment? Listen, if you were to go out and take the easy money out there, and believe it or not, there are some really easy money stuff out there. I mean, you just have to wait for it. you would be shocked, thoroughly shocked, of what your P&L would look like at the end of the year if you just did that, rather than trying to get in and out and in and out and in and out and find the. You're going to have that over a series of trades. You will have the big outliers that are just monsters. Matter of fact, as a lot of my stuff is swing trading, I think I'm safe to say that most of my profits will come from about 5 or 6 trades this year. And I know that's hard to believe, but I mean, those will be really, really big. I mean, I can tell you gold right now is is the winner this year for us. I mean, it's been just an incredible trade this year. So we've hammered that thing for a long time. And when we get one, we're going to hammer it, I don't know how many trades we've had on that this year, but I think it's like 6 trades, I think it is. And they're all been swings and they've been phenomenal. So.
All right, gang, we got 7 minutes. Any following or final questions that you have for us before we wrap up? Watch Crude today. If we get down to that 54.40 area, we'll be looking for that to hold, and then looking for a responsive long back towards 55, 54.95 area. Nasdaq, if we can get up to 56 or 69, watch that. Have alerts up there. See if we see some sellers step in. Those would be places I'll be looking to rotate back towards the 26 area. Fair enough. Those are the ideas that remain yet today. If none of those conditions are met, hey, we take no trade. And by the way, you'll know that you are being patient, the right appropriate amount of patience when you have at least a couple days a month that you actually take no trade. That's always a great. There's a couple metrics. One, if you're having a couple days when you're exceeding your mask loss, and, you have to kind of shut it down. But if you have kind of a max drawdown that you set for yourself and you exceed that once a month, then you're about where you need to be from a risk standpoint. Assuming that that's a reasonable number that you've picked and not just some arbitrary one. And then if you are not taking a trade at least once a month, that's also a good indicator that you're being the right appropriate amount of patience. So with that, any last question? I'll be quiet. Any other questions? We've got 6 minutes, and then we'll let everybody get into their weekend.
Yeah, maybe take this weekend while you're putting a question there and just take a look at your trade plan. Make sure it's outlined. If not, shoot us an email or something. You have some questions on that. We'll talk with you a little bit about it.
Yep, indeed.
No questions, man. You guys are easy this week.
They are.
Questions.
Yeah, we got John's. We've answered all the questions that have been placed out there. So we're in good shape.
Well, I can tell you I'm done. Usually it's 9 a.m. my time. I'm on the West Coast, and that's noon New York. If there's not a trade from me prior to that on a normal Friday, I'm done. I'll lock it down and go home and grab my profits and lock them in the bank. But today I'm done. I'm totally done. I'm going to call it a day. It's a beautiful day outside, so I'm going to go enjoy it.
Nice.
Josh, you going to get on the bike?
I think so. Yeah, I got a race on Sunday, so I did good work yesterday. I need to kind of just loosen the legs for the work on Sunday.
Clean those lungs out too.
I need to clean. Yeah, I need to clean the lungs out too. That's. Oh man. Well, hey everybody, thanks for sticking around with us. Really appreciate the questions. Just a couple next steps. If some of you are part of our community, love that you guys are here. It's an extra opportunity for you to ask questions and get some more look at the market. But if you've not taken the next step to spend a week with us, please do that. You'll get to see one of our development modules. You'll get to see trade plans throughout the week. It's free and available to you to do that. If you're not following us on Twitter, we do post some decision level charts and some profiling charts every day. You can also interact with us on Facebook, although I don't really know about Facebook. Twitter seems to be where traders are. If you need help or have any questions, you can send an email to team@tradewithprofile.com or give us a call. That number also receives text messages, as Google is helpful with that. But overall, we're here to help traders learn to profile, make better trading decisions, and take more profits. And we hope that it's been a beneficial part of your time to be with us today. We'll be back next week with another session. And now that I'm feeling better, I was a little late on getting last week's recording out, so I'm gonna, as soon as we get this done, I will get this one going, and we'll get this back out to you so you can review it over the weekend as well if you have any questions. All right, gang. Well, that's it. We'll talk to you next week, and have a fantastic weekend and rollover day, and get ready for FOMC next week.
Oh boy, fun times.
Will he raise or will he not?
Take your bets, everybody.
Let's do one last thing here. Let's take a look at the FedWatch tool here.
Oh yeah, I think it was 88% last time. So
has it come? Oh, it has come off.
Yeah.
So it was 98% that they were looking for that cut. Oh, the plot thickens. Da-da-da.
Yeah. Will they? Oh boy, this is going to be. And just if they hold rates level, just expect the tweets to come. I'm going to give you guys a tip. Yeah. So here's the tip, guys. If first of all, don't trade during that time. That's the first tip. The second tip is if rates do come out flat and he doesn't, drop them, it just close your browser and go away for the day, because the tweets will start coming out, and they will be hot and heavy. And then just expect the China tweet to come right behind it that says, we've got a deal with China we're working on.
Yep.
And he will blow this market north. And I will tell you, it will be so volatile. Just what happened yesterday was crazy. So,
oh my gosh.
Golly, that's nuts.
Yeah. All right, there we go. That's it.
Yep, that's your tip for the week, man. Enjoy it.
Have a good weekend, everybody.
All right, guys, take care. See ya.